This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Tuesday, September 9th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and be sure to get to it during the show. Overnight markets are December corn down to at 4.19 3/4. November soybeans are down a penny and 3/4 at 10.32, and December Chicago wheat was down 2 1/4 at 5.21 1/2. No export sales announcements here this morning, so we'll jump in. We got crop conditions yesterday afternoon. Corn down 1% in the good excellent category versus last week, and still well above the 5-year average of 58%. 4% harvested nationally. That's versus 5% last year and 3% for the average. On the soybean side, also down 1% in the good excellent at 64%. Still slightly ahead of the average of 59%. Spring wheat, 85% harvested. That was versus 72% from the previous week, and just slightly above the average of 84%. And on the winter wheat side, we are 5% planted. That's right in line with last year, and right about at the average there. 6% is the average for winter wheat. So good morning, guys. Corn, we continue to kind of hang around that 50-day moving average, still finishing above there. We've got the USDA report on Friday. And Justin, maybe just a few thoughts. I thought it was interesting. We were talking before the show, you know, you look at national crop ratings, and we talk a lot about how arbitrary they are. You know, it's kind of a drive-by and see what it looks like. But you know, just to see some of the drastic drops in some of the key producing states versus the improvements in others was kind of interesting. So maybe a few thoughts there to start the day, and then we'll kick her around the room.
Yeah, I mean, I think crop conditions are kind of a lot of people have gone broke trying to, you know, relate yield to crop conditions, you know, over the years. So obviously they, you know, they've been very high. Last week yesterday, you know, all the major states kind of went down, and then, you know, a lot of states that you don't even look at go up to offset it. So I don't think it really means anything, you know, this time of year. I think if you look at state by state, it kind of makes sense where it's dropping off, and then they pick states that, like I said, Pennsylvania, Alabama, you know, they have states that go up sharply to kind of offset it to make it only down 1%. But it's kind of irrelevant, in my opinion, on what the national yield is. You know, that being said, yeah, I think it's going to be interesting. We have a lot of people now getting in to harvest. I think you're going to see a lot of variation between, you know, who you know, used fungicide, you know, between 1 application, 2 applications, 0 applications. So you're already seeing some vast differences on, you know, 30 bushel an acre yield differences at least on, you know, people that only use 1 application versus 2, and people that use 0. I think you can kind of see just driving by fields, you can see those, you know, completely brown, kind of dead looking, and it's been that way for, you know, a couple weeks. So I think it's going to be really interesting once we start getting into, you know, more and more fields, which I think is going to speed up here, especially with the, you know, forecast that we do have. Surprisingly, and, you know, Dustin can add to this, but surprisingly, bean yields have been pretty good, you know, especially in areas that have been super dry, you know, the last 30 days or so, which is kind of surprising to me. So I'm really kind of waiting on, you know, guys to get into, you know, 20, 30, 40% harvested and kind of see what those yields end up being, because so far it's been pretty resilient for what I would expect.
Oh, very good. Dustin, some thoughts there?
Yeah. You know, beans, They have very few acres this year. They need a big yield, and so far, just very anecdotally, so just take this with a grain of salt, but like first fields coming out have been better than we expected in the east, in the areas that we would have thought. You look at the monthly rain totals, all less than an inch for many of these counties, some down to less than a half inch, and yet yields are surprising. The early ones that are coming off, and maybe that's going to be just because they were timely rains when they got them, and it was the early stuff that's the best stuff. It's not typically the case, right? The later season is usually what we would expect to be better. The forecast is extremely dry still for the east the next 2 weeks, so in the end, maybe it's not necessarily a well above trend line yield just because we didn't finish off well. But so far, we've been surprised by the information we've heard. And I think when you go to the fact that China's bought 0 from us for new crop beans, that's been a big part of what's kept the ratio off of its highs, despite one of the most bullish things for the bean corn ratio that I've ever seen is the August WASDE acreage change. You have the early yield results like we're talking about, and then you have the fact that China's not buying anything, which is close to 1 billion bushels of bean demand that we need. What's going to be the outcome? I can say this: if for some reason we were to see some very positive trade developments with China, the market is set for a very unique spot because we don't really have the room with what we're trading right now. I don't think the market's expecting a trade deal with China, and that would be new information. I think one of the things I did want to touch on though is like the back end has been fairly strong, and we talk a lot about currency. Gold is a speculative market like anything. It can have a bubble. We've seen this a number of times in history where gold just gets way overdone on animal spirits, people buying. I do think that you look at almost every metric of what it costs to live, and the fact that we need upper fours for corn and 1150 beans to break even for so many customers. I don't think that's. I don't think anyone has any confidence that number is going to come down in near term in the next year. And maybe it's just because we have to refocus on the dollar denomination. We've talked about a lot on the show that we think 350 corn does better for the average U.S. grower this year than $4 corn because of all of the insurance they might have bought, the farm bill coverage they have. It's not going to be good for the future years if we keep seeing low prices, but it's certainly, while the insurance is active at a 470 corn price, 350 corn may actually help people in this environment trigger a bunch of extra payments and layer and tranche on top of each other. That may not happen just based on what we're seeing, even with all these bushels, this widening of the spreads. It may not happen just because the dollar denomination doesn't call for it. Is that we're feeling real inflation, commodity inflation on both the buy side and the sell side. And it's been true. We were able to make 350 corn work a decade ago. $4 corn was actually a good price a decade ago. But maybe now it needs to be closer to $5 corn to make it work and to be profitable. And that's just going to be what we need for future years going forward. And we're in a transition period. So I would say keep an open mind of what's possible. And we always preach balance to what the products are that you're being covered on. I think this is just a good testament of that as we've been rising following such a bearish August WASDE report.
Very good. Ben, some thoughts here?
Yeah. The market is it's a slog right now. I think we're waiting for Friday's data drop. Interestingly, corn is finds people willing to step in front of it on the rallies and people willing to step in and own it on the breaks. But we've spent 1, 2, 3, 4, 5, 6, 7 days above the 50-day, and we only needed 14 cents to go try the 100-day, and we still haven't gotten there yet. Right now, we're a dime away. So it's just, it's the market's going to move away from this, I think, eventually. You go back to some of the early years where we had the the 330 corn that lasted a couple of years, or the 205 corn that lasted a couple of years? Are we gonna hone in on 420? Well, that's not a really good place to be for most people. So from what you want and what you need, getting away from 420 seems to be the best outcome. So I maybe we should prepare to be at 420. I don't know. Just a really lethargic trade in my opinion right now.
And 418 is where we finished, or was it 416, 418 last fall too, right where we were last year. I have been hearing like some major banks too start talking about getting their customer base starting to buy commodities as well. Right? Like commodities are starting to be in vogue again when we're starting to talk about cutting rates, and the fact that like we're willing to take no pain as a country and just keep expanding the debt. So again, I think that when we're questioning why is it kind of hanging around here, yet spreads that continue to widen. I think that just goes back to the same thing as you say that, Ben. This makes me think that.
Justin, anything to add there?
No, I mean, I think we've talked about a lot. The problem is in the short to medium term, we've talked about this for, I feel like for a year, but the market does not care about what it costs you to produce corn. And the job is to make pain. Like if the market feels like it's an oversupply environment, it's to create pain for the weakest producer, the highest cost producer, right? And I think that's the biggest problem. And maybe currencies help fix this with, Brazilian currency. But right now, the lowest cost producer, and it's been this way for a decade, is South America. And, when you go back to Dustin's comments on soybeans, the problem is it's not just that, China's not buying from us, it's what's the total demand from China. And so far they've been, above a year ago, really good imports, and people are excited about that. But, you flip it the other way and be like, okay, well, they're doing everything they can to avoid U.S. soybeans right now. So of course they're going to load up as much, Brazilian supplies, Argentine supplies as they can, so that they can bridge the gap, until their next harvest, which is, February, let's say. So although it looks good, as far as like their total, I think there's a big question mark on the future of China, and maybe why, kind of getting off just the ag soapbox for a little bit. And you look at, these meetings with, Putin and India and, trying to kind of get away from the US. This might be kind of their last stand a little bit. When you look at like the bigger picture demographics of China, they might not be as powerful 5 years from now as they are right now. I feel like they have to make a stand because their demographics is pretty dismal. I mean, some projections have them going down to, 400 or 500 million people in the next, decade or two, from 1 billion plus. And we found out that, the 1.2 billion was kind of phony. It was closer to 1 billion, so a couple 100 million people that they're off by. So I think there's some bigger things at play here. And I keep going back to, we have to figure out a domestic policy to use it. Cause I just don't think, even if we do a trade deal, it's a Band-Aid, in my opinion, with China, because I think their demographic issue is a bigger issue than, it's not a 1 or 2 year problem for us, but if you look at a decade from now, it's going to be a problem. And I don't know who the next, the demand growth that we saw in protein from China over the last 2 decades was, fantastic. I don't know who the next buyer is of that. Is it Africa? It doesn't look like it. Is it India? I mean, I don't know who the next major population is that's going to take on that protein deficit that we're going to see. So not to get all dismal, I mean, we could play some sad music here, but I don't know.
No, it goes back to biodiesel again. You always circle back to like, it's getting domestic use here in our country. I mean, there's no other path that you can clearly control, right?
Yeah, I mean, we have some fantastic demand domestically. And I think, obviously cattle prices, and Ryland can talk to this, but if we can figure out some more expansion there, but that's, those are all medium to long-term things. Short-term, it's going to be what this yield is and what South America does next year, all those kinds of things in the short run. But yeah, long-term, I don't know. I don't know what the answer is.
Very good. We'll move over to Ryland real quick here. We chopped around yesterday for most of the session, but we're able to carve out a higher finish there in cattle, rye. And then front end of hogs got beat up with Goldman's roll starting. So what's on your mind here this morning?
Yeah, it just kind of seemed like we're getting a little bit of a turn right now in some of the news. I mean, we actually saw open interest down to a pretty large degree on the live market and the feeder market. So that's going to create some pretty heavy caution this morning here. We're starting to see just, a little bit of weakness on the cash side. Beef prices starting to drop a little bit. So it does feel like maybe we're hitting a bit of a seasonal wall here. This was kind of the big fear getting into this time frame. And like we stated before, we didn't make any new contract highs here last week. So that was kind of put everybody on notice. So we're going to see how it acts today. Obviously, it threw a lot of kind of bad news. Added Choice made a new low for the move. And I think the expectation now is that if the board's going to fall apart, we're going to see cash trades start to trickle lower here again. So overall, I think that's what everybody's looking to see. Also on the hog side, I mean, you had two-sided trade yesterday. You got Goldman rolling. So it looks like there's going to be a lot more interest in the December on back here. But overall, the news wasn't too bad. Cash was up. Cash was up 258 at 103.83 yesterday, and carcass back up at 116.38. So it's definitely holding up a lot better than expected at this time. Managed money wants to stay long, playing a lot of defense here. It's just kind of feels like we're at a price level that definitely is getting producers likely to hedge a lot more, especially towards the kind of the back end of this year. I feel like you're already priced in a pretty good drop in cash between now through December, and we've been on this nice move. So I think it's about time. But overall, the news is pretty good. So imagine the front end of the market's going to hold up okay.
Very good. Appreciate the update there, Rye. Let's get a quick readout here. We just opened the markets. December corn's down 2 1/4 now at 419.5. November soybeans are down 2 3/4 at 1031, and December Chicago wheat is down 1.5 at 522.5. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. I hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.